Let me know where you are calling in from. Memphis, good evening. Once again, ladies and gentlemen, this is Tasha M. Dyer, the Trade Whisperer, and I want to welcome each and every last one of you all to BYOB Market Talks. Yes, this is BYOB Market Talks. So now look at that. BYOB Wealthy Women having global impact. I love it. Make sure you drop those affirmations in the chat. Along with those affirmations, I see that I am unbothered, right? I am unbothered. So you definitely want to make sure you drop that in the chat. And I want to welcome each and every last one of you all this evening. Good evening, Cleveland. Good evening. This is BYOB Worldwide. This is BYOB Worldwide. Now, if this is your first time with us this evening, let me get a 111. Let me get a 111 in the chat. Your first time on BYOB Market Talks. Let me get a 111. Hey, Freedom Fighter. I like that. Let me get a 111. Let me get a 111 in the chat. And if you are still learning how to cash out, let me get a 222. All right, welcome and welcome back. Welcome and welcome back. Welcome and welcome back. So welcome everyone. So as promised, what we're going to do, good evening as everybody continues to log on. This is BYOB Worldwide. Now, this is the largest economic empowerment movement in the history of mankind. So I'm excited. I'm excited. This is a training call, right? That's what BYOB Market Talks is. So as we, good evening, hello. So I'm gonna go ahead and get my screen share together. But as we begin this evening, right, as we begin to share, as we begin to do this, and as you guys continue to log on, I see you guys logging on, go ahead and just continue to flood the chat, drop it in the chat. I wanna make sure that you're walking in affirmations, right? Just keep dropping it in the chat where you're calling in from and your affirmations. So even if you're just logging in, you know, those affirmations are important. Mindset is key. Your mindset is critical. Your mindset, what you walk in, right? So good evening. So, but what we talked about and what we decided, you know, we talked this morning and we've been training to the tools and we've been using the tools right along with the BYOB Cashout. And this morning on our live call, you know, on the 5 o'clock and the 9 o'clock call, you guys have noticed that the evening that a lot of the times when we pull from one of the tools that we use, which is the Harmonic scanner, is that I always pull from the hour chart, right? I always pull from the hour chart. And so what happens is you want to pull from the 15-minute chart. And what happened this morning from the 5 o'clock call to the 9 o'clock call, what you guys saw is one go from a buy to a sell, that harmonic pattern flip. So we said we were going to talk about that this evening, right? We were going to do some training and we were going to talk about that this evening. And so that's definitely what we're going to talk about this evening. And so what we're going to do first, of course, is we're going to go over the BYOB Cashout. We're going to talk about that strategy. We're going to talk about the BYOB Cashout strategy. We're definitely going to do that. I always want to make sure that we walk through the strategy. We're sitting on the strategy. We have complete understanding. And then also from an understanding standpoint, let me turn this off. So also, let me cut that cha-ching off. So also, I like the cha-ching, but when we're training, I want you guys to be able to hear me. So also from an understanding standpoint, we're going to do a little change. And what that means is we're going to continue with the tools training and we're going to leave that to the Thursday training. And also on Tuesdays, we're gonna kind of bring that back to some of the basics, where we're gonna make sure that you guys can, how the cha-ching is very motivating, right? It's very motivating. So, but we're gonna do on Tuesdays, we're gonna have like that basic training where you're in complete understanding of the strategy, making sure we got that foundation right, understanding, you know, because what we're noticing is you have those questions. So I want to go over the strategy, but I want to make sure that we have that, you know, Tuesdays we'll leave for those basic questions, that the basic training, understanding of the strategy. And then on Thursdays, we'll have like what we're doing now is that tools training. So we'll kind of divide the evenings like that. So you can have that, you know, that real intense training on Tuesdays for the strategy. And then of course, on Thursdays, we'll do this tools training. We'll kind of break that down like that. So everybody, you know, you get this deep, complete understanding. Okay? So we definitely can kind of walk through here and walk through it like this. So yes, and again, welcome to everybody that is continuing to join the call. So welcome, welcome, welcome. Now, let me go ahead and get the screen share together. I'm pulling this up for you. Now, here we go. Let me go ahead and share this with you. So here we go. Because and what we want to do, and the reason we're doing this tonight, answering these questions, and the reason why we want to do that is we want to make sure everybody has that opportunity to drop that 777 in the chat, right? We want everybody dropping the 777 in the chat. Everybody needs to put that 77. We walk it in that affirmation that I am 777, right? We're all walking in that affirmation, I am 777. You know, if you have not seen the recording from Dr. Bythewood, where he walked that I am 777 out, where you understand how you walk it out on purpose, you know, you'll understand that I am 777. You definitely want to understand that. You want to make sure that you understand what that I am 777 means. And so that is very significant. And so I will continue to drop that in there. And if you have not heard Dr. Bythewood, I mean, immediately following this call is Dr. Bythewood, right? Immediately following this call is a talk with the finance doctor, you know, a gentleman that has a PhD in finance and economics. So you definitely want to make sure that you make sure your Tuesday and Thursday evenings, these are these power-packed evenings, and your Tuesday and Thursday evenings have to be your BYOB nights, right? These are your BYOB nights, because this is how you make your evenings. You stack your evenings for your wealth generation, for your legacy building. And so that is what this is about. And I promise you, you know, with your training, your tools training, your market talks, understanding what the market is saying to you, and then you hear from Dr. Bythewood, understanding the why behind the what. This is where you need to be on Tuesday and Thursday nights. And so when you hear him tonight, and then you go back and you replay that I am 777, you will understand why that is part of your affirmation. And we're telling you, you're going to walk that out on purpose, right? You are going to walk that out on purpose, right? We are walking this thing. This is economic emancipation, and you are going to walk it out on purpose. We are walking it out on purpose. This is the largest economic empowerment movement in the history of mankind, and you are going to walk this thing out on purpose. We are intentional about the destiny decision that we have made. We are intentional about this thing. Now, here we go. So we got our stochastic, right? Let's talk about this. Yes, 1 million strong. Yes, yes, yes. So we got our stochastic, and we got our Hikanashi candles, and we have our PSAR. We got our stochastic, we got our Hikanashi candles, and we have our PSAR, okay? So when you're looking at this, and we have our stochastic, okay? We got our stochastic, our Hikanashi candles, and we have our PSAR, okay? That is what we're looking for first, okay? This is what we have. Now, with that, the stochastic is a leading indicator. are Hikinashi candles, and my PSAR are lagging indicators, okay? So understand I'm on my 15-minute chart. Let me get my times together on here, right? You don't want too much selected. You notice when we do this drop down, you have all these different times, right? We got all these different times. You don't want to have too much selected on there, right? Your analysis paralysis, okay? So now I got my stochastic, and what notice I'm on my 15-minute chart. Now with my stochastic, I got my blue line that cross over the red, blue line cross over the red, and the downward momentum. I have my, and so once I identify that, now it's either going to be this blue line cross over the red and an upward momentum, and that's going to happen around that 20. And I'm looking for this to happen around that 80. You notice where my stochastic runs from, right? So let me grab an arrow for over here. We're going to look at them both at the same time. So you notice that when it happens around the 80, I'm looking for a sell. When it happens around the 20, that crossover, cross up, I'm looking for a buy. Crossover, cross up, I'm looking for a buy. Crossover, cross down, I'm looking for a sell. It's just like momentum, right? If it's at the bottom, it's got to go up. If it's at the top, it's got to go down, okay? It's at the bottom, it's got to go up. It's at the top, it's got to come down. So now I know for this one, I'm looking for a sell. So I begin looking for my other two indicators that line up, okay? I begin looking for my other two indicators that line up for a sell. Over here, I begin looking for my other two indicators that line up for a buy. That's what I'm looking for, okay? That's what I'm looking for. Now, right here, what happens is I got my red candles. I'm looking for, these are Hikinashi candles, okay? These are Hikinashi candles. What do Japanese candles look like? That's what Japanese candles look like. That's what they look like. So you notice that I'm not trying to have to read Japanese candles. Hikinashi candles translate and interpret. So I'm gonna go ahead and answer your question for you right now. I do not have to wait for a candle to close. I do not have to wait for a second or third candle. I do not have to wait for that because they interpret for me, okay? They interpret for me. So now I got a red candle with a flat top, green candle, flat bottom, red candle, flat top. So I know if I'm looking for a sell, everything at the top. I'm looking for that PSAR. My PSAR is my parabolic stop and reversal, okay? My PSAR is a parabolic stop and reversal. That's what that is. So you notice that I got a red candle with a flat top, and I got a PSAR that flipped to the top. So that means that it's lined up for a sell. Over here, I got this crossover and cross up. I got a green candle with a flat bottom, PSAR flip to the bottom, right? That's what I'm looking for. So now, what do you see? That I'm literally, it's a buy, right? It's looking for a buy, it's looking for a sell. Now, my stop loss, okay? You need to be thinking stop loss, okay? You gotta be thinking stop loss, right? So my stop loss is literally, my stop loss is not on the PSAR, okay? It's not on the PSAR. My stop loss is above the PSAR somewhere. My stop loss is below the PSAR, right? It's always below, it's always above. So where you put it, above or below, is completely up to you, okay? Do you see how this is on that PSAR? My PSAR is a trailing stop loss. You notice how it will touch it. It will touch it. Look how this one touches it. So you do not want it on your PSAR. You want it above or below your PSAR, okay? You can just scroll through there and find many times, like, look at this. It touches the PSAR. It touches the PSAR. You can continue to scroll. It touches the PSAR. You can just keep scrolling. It will touch that PSAR. Do not put your stop loss on the PSAR, okay? Now, that is the BYOB cash out in its simplicity. So what do you want to do now? You want to use something called time frame confluence. What is time frame confluence, okay? Get this question a lot. Time frame confluence, it is going to help you identify. It is using different time frames to help you identify confluence, okay? It's going to use different time frames to help you identify the confluence, meaning that the market is flowing with you. Like the market is moving with you. Like you are flowing with the market. Understand that the lower time frames do not tell you what the market is doing. And that's very key for where we're going tonight, okay? That's very key for understanding what we're talking about tonight, right? That's very, very, very key, okay? For what we're talking about. So tonight, that's why I'm saying it over and over again, okay? I want you to understand that. So when you think about that, and you think about what we're talking about. So if you're thinking about confluence, okay? If you're thinking about confluence, you're thinking about if you're really understanding that definition, it's like something merging or something going together or something kind of working out, you know, in that area. But I'm looking at it from the point of, like, let's say I need it to be like going in the same direction, okay? That's really what I want you to kind of think about, right? I really want you to kind of think about it from that perspective, okay? That's what I want you to think about, okay? It's going in that same direction. It's going in that same, you know, that same, I want you to think about that same understanding, right? Where it's headed. So if I'm looking at it from that perspective, and if I'm thinking about it like that, right? My phone. If I'm thinking about it like that, then what I want you to understand, when I go to the hour time frame, okay, I'm going to go to the hour time frame. When I go to the hour time frame, if I'm looking for confluence, right? If I'm looking for confluence, that means that confluence, right? That confluence means that it's going in the same direction. That confluence means it's doing the same thing, okay? I got it, it's doing the same thing. So now let's think about that for a minute. It's doing the same thing. So look at this. That means that here I was looking for a sell. Here I'm looking for a buy, right? Here I'm looking for a sell. Here I'm looking for a buy, right? Here I'm looking for a sell. Here I'm looking for a buy. That's what confluence means, because my lower time frame does not tell me what the market's doing. The lower time frame is the action. So my hour is the swing of the market. It's not the trend of the market. You got to understand that. But right now I'm concerned about where is but my confluence for the 15-minute is on the hour. So my hour tells me that it's moving in that same direction. Now my 5-minute, right? My 5-minute, okay, needs to still be selling, because that is about entry point. It happens first, right? It happens before. So it's just more movement. And so if it's more movement, if something shifts or if something changes, it'll happen on that time frame first, okay? It'll happen on that time frame first. So you can kind of see what I'm looking for. So this one will have to still be selling, and this one is still buying. That's what that is, right? That's what I would be looking for. Now, I actually have time frame confluence now with these trades. So I know that with both of these, I can get my 10 pips and cash out. I can grab my 10 pips and cash out. I got it. I got my 10 pips and cash out, right? I grab my 10 pips. Now, or understanding support and resistance lines, I can actually go to the support line, resistance line. I can go that far, okay? I can definitely go to support and resistance line. So that is what we need to understand. Now, how do you go further? I'm gonna divert that, and I'm gonna, you know, how do I go further? I'm gonna divert that. Well, actually, no, let me not, because let me show you something, because that's gonna help with tonight's training. Now, right here, both of these, this one, my actual trend of the market, right? Look at this. Both of these are not showing Like this one would need to be a buy, this one would need to be a sell. But if I look at this, and honestly looking at this, right, for the trend of the market, you can just kind of scroll out and look at this and tell that this is a sell, right? If I scroll out and look at the overall trend of the market, I can look at my stochastic and tell that the overall trend of the market is in a sell, right? So this one is obviously a pullback right now. I'm not trying to really buy right here. This one, obviously, the trend of the market is in a sell, okay? The overall trend of the market is in a sell. You know, that's what this is. And then you also confirm that with the stochastic, that we happen to be looking at the trade while it's in a pullback. So you wouldn't know what happened right here. This is what you would have been looking at right there, where I kind of line it up right here. And you can kind of see, we'll look at my stochastic, look at what's happening. So you would have been looking at it from that perspective. So you probably would not have taken that trade, right? You would not have tried to take that trade. You would have just, like we said, we'd have just traded it to the support and resistance line and called it a day. That would have been it. And you know, it really didn't go far, right? The trade didn't go far. You would have just grabbed your 10 pips, grabbed it to the support and resistance line, and you see it played out a little bit further. Guess what? It's okay to be safe, because what happened when you were not with the trend of the market, you decrease your accuracy, because we don't have, like, you don't know that this trade played out. You don't know that. You don't know that. And it's okay to walk away from it than to stay in it and it don't play out, because the strategy is back tested at 92%, right? Back tested at 92%. You have many people cashing out higher than that. But if you're at 92% or higher, it's better, you know, when you start chancing it or getting in it, because look at this, you know, when you start chancing it or you start trying to sit in trades when you shouldn't be in trades, now your chances, you've lowered it to about 50-50. And you do not want to be sitting in a trade chancing it at 50-50. It's not worth it. It's many more trades. So I definitely want to highlight that as we kind of walk into what we're talking about tonight. Because that 50-50, that means sometime it'll play out, sometime it won't. We're looking at that, sometime it will. Sometime it will, sometime it won't. And it's just not worth it. So it did, and that would be great. You'll get your 777. But what happens when it doesn't? So we always want to operate with the proper mindset and the proper risk management. So let's talk about what we're supposed to be talking about tonight. This is the harmonic scanner. And you'll often hear me just say, oh, this came from the scanner, or it's a harmonic, right? So either one is the same thing. Either one is the same thing. Now, I cannot come through here. I cannot pick my currencies, okay? No, you cannot come through here. You cannot pick your currencies. Let me answer that up front, because I get a lot of messages, okay, about these things. I get a lot of messages about I get a lot of messages about this, okay? You cannot pick your currencies. That's just something you cannot do. Now, what is this? When you're on a higher, of course, if I'm looking at something on a daily, you know, if I'm looking at something on a daily, right? If I'm here, right? Of course, if I'm here and I see a harmonic pattern on a daily, guess what? If you're swing trading this pattern on a daily, you know, whatever broker you're pulling off of, the broker does not matter. So the broker does not matter. If you're pulling off of the daily, right, then guess what? This, you know, these patterns, literally, you see how they have less patterns that happen and they pull on the daily. They have less patterns. The broker does not matter. But the higher time frames is the direction of where the market is going. Now, where you see me pull most of the time is the hour, okay? The hour. Now, and this works the same as anything that we do, right? Why do we do time frame confluence? Because we do it on every time frame, so it's not just the lower time frames, but the same rules apply, the same thought process applies, the same concepts apply, the same mentality, the same All of this should still be, how you do one thing is how you do everything, right? All it should still be the same, and the same thought process should run through your minds. If the higher time frame tell me what the market is doing, when I come here to the lower time frame, right? When I come here to the lower time frame, then the lower time frame is the movement and the activity. The lower time frame is the movement and the activity. So this does not tell me the direction of the market. I still need the higher time frame to tell me the direction of the market. So if I draw support and resistance lines on the higher time frame, but yet there are support and resistance lines on the lower time frame, right? There are. So it's not that they aren't there, because remember, these are support and resistance lines, but they're also Fibonacci retracement levels. That's what they are. They're still support and resistance lines though. So you notice that when we use these, or if we use these numbers, because you notice I'll grab the numbers that they utilize, but there are always numbers in between there. There are always support and resistance levels in between there, because those are actually support and resistance levels, but there are still Fibonacci. So these are the Fibonacci retracement levels that are support and resistance lines, but then there are also more support and resistance lines in between there. So with that being said, right? So if I come here and I'm looking at this, I mean, you can see that these support and resistance lines, but guess what's in here? That's another support and resistance level in here, right? That's another one that's actually in here. So that's another support and resistance level, even though these are Fibonacci retracement levels. So if I come down here, right, to the 15, okay? If I come here to the 15, then there's an expectation that there are going to be more patterns. Because if we have patterns that flow on an hour and don't play out, there has to be an expectation that I'll get more harmonic patterns on the lower time frames, which would be the 15 is the lowest that you see on here. There has to be an expectation that there will be, you see how many more there is on the 15? So there has to be an expectation that the lower I go, that there are gonna be more, right? And there, because I mean, look at this. If we go all the way down to the bottom on the hour, then these are typically played out on the hour. So like, watch this. So if I'm on the hour and I come down here on the hour, right? See, because we would have pulled this up, right? We would have pulled this up. So that would have been played out. We always pull this up. So, well, this one's not played out, but oh, these are the time of the day too. So the time, let's just see here. Where we at? So this one, look what this one's on. It's the when to take profit too, pull back some. So, and you know our GBPs beat to their own drum too. So GBP does that. But you know, when we pull those in the morning and we're way down there, those are pretty much played out. The ones at the bottom, right? Whenever we look on here in the morning. So now let's just go look at a few of these, but understand that there's an expectation that more of these will fall off, right? That more of these will fall off. There is an expectation for that because these harmonic patterns, right? You're gonna get more harmonic patterns, and these harmonic patterns will actually fall like in reversals. They'll fall like in between the trends. They'll fall in so many different things. So let's just go set some up. I kind of wrote some down. So let's just look at some. Okay, let's just look at a few. And it's in the academy. And it's in your academy as you go through the series. When you're asking about learning about the harmonics, it's in the academy. But the way I teach it, right? The way I teach it to use the BYOB Cashout. And that's very intentional because it uses those areas of value. And you want to be able to do that. You want to be able to use the areas of value. And you definitely want to be able to do that. You never want to trade that. You want to eliminate all the guesswork. You don't want to trade this. You don't want to trade this at face value. You don't want to just that, right? You don't want to trade this at face value. You don't want to do that. So the way I teach it, you're not going to find in there. But you will find harmonics in there, but not the way that I teach it. But you'll definitely, did I write the number down right? Let me check my number. Nope, let me check my number. 0. So I mean, it's in there. But yeah, to understand harmonics, it's in there. It's in the series. When you, it's in the higher series. Uh-oh, didn't mean to do that. 0, 1, 9, 0, 7, 6, and enter. Why is it doing that for me? I hit enter. Probably because I'm on the JPY. That would be why. I'm putting in too many numbers. All right, so, right? So if I'm looking for a buy and I was looking for a buy and this was around 0, 0. So this was around here. But that can't, let's see here. 17, 0, 0. And you can kind of see. So let me move this over here. Oh, the time is different. That is what it is. I'm like, I know that cannot be right. So 2116, that is what it is. There it is. It's right there. I know I had it right. So just by eyeballing it. So right there, okay? So what you want to be able to do, right? What you want to be able to do is you want to be able to come through here and make whatever adjustments you need to be able to make. You don't ever want to take this at face value, right? You just don't want to take this and just take that trade and just trade it blindly, okay? You don't ever want to take these trades blindly. So yes, you can still take these trades, but you need to be able to make that decision. So first and foremost, okay, now let's look at this, okay? Let's look at this. Now, I understand that's a Fibonacci retracement, okay? But what let's adjust this. Let's start here. Let's go to our line chart, okay? Let's go to our line chart. Looking at my line chart, am I going to leave my stop, my take profit way up here? My answer is absolutely not, because I understand that, but I'm going to bring my take, actually, let me leave it there. I'm gonna just draw a new one so you can see the difference. Mine would be here, okay? And I'm gonna change the color of it because I want you to see it. This line chart actually uses the closing price. So because it uses the closing price, and let me push that one back up just a little bit. That one uses the closing price. And because it uses the closing price, I'm going to adjust this to where the price closed. Like you can see it closed here. It closed around here. Look at where these touches are. And if you want it to be more comfortable, I mean, technically you could bring it down some more if you want to. This is where you're comfortable because you see where the market was closing at. What was the market doing? Okay, so you're looking at that closing price. So I understand about that retracement, but I want that closing price. If you want to make adjustments on this one as well, you can. But one thing that you want to kind of remember also is that a support and resistance line is never a definitive line in the market. You know, it's always a zone. So a lot of times you'll see traders, or you'll see people, they'll have like these little zones. They'll have like these little boxes. That's what that is. That's what that zone is. It's never a definitive line in the market. So you can kind of see where you have this little zone area where it kind of had a top and a bottom that's right up in there. So if you wanted to take profit down here, or you want to leave it right there where it's at, it's perfectly okay. Now, if I want to switch this back to my Hikinashi candles, you can kind of see how that adjusts. Look at the big difference between there and here. And you can see, now look at the top of those candles, right? And you can kind of see where it wicked up here, it wicked up there, it wicked right here, where it just kind of wicked up. So that's very important when you're understanding your take profit. That's real important when you're looking at take profits. Now look at how choppy it is in this zone right here. Look at how choppy it is. And when I say choppy, you can kind of see how the market had a little hesitation in between each one of these. So that's what that zone is, okay? And I just call them zones, that, you know, so that's what that is. And so you can kind of see as it was moving up, how it kind of paused, but then it will pause here and move down, and then it finally broke through. And even when it was coming down, look at where it hit right here, or where it got stuck in between that zone right there. You see how it kind of wicked up and down right up in there. So you can just kind of see that zone. It didn't hold it really, but it paused it a little bit. But that's that zone. And so you can kind of see that. So if you want to take profit on the bottom of it, on the top of it, but there's to be some expectation that your trade might pause a little bit right up in there. So that's just you saying, okay, I must look even right here where it paused, and then it pushed. So that's up to you to say, you know what, do I want my take profit here, or do I want it on top of that? So this is how you be in the signal. And I mean, there's really not that many pips. I mean, seriously. So, but that's up to you, where you say, you know what, I want to be that person. I'm that signal. And then also, have you ever been in a trade and you're like, oh, my trade didn't take profit by like a few pips? This is how you eliminate that, right? This is how you eliminate that. Because if you don't think this is going to impact your broker spread, you're wrong. So, you know, you want to eliminate that as well. So that kind of helps too. Now let's look at the BYOB cash out. Why do we spend time on that at the beginning of this call, right? Let's talk about that. So this is where the BYOB cash out actually activated, right? Let's talk about the BYOB cash out. I got my blue line crossed over the red and an upward momentum right here. Blue line crossed over. So let's put an arrow right here, okay? Blue line cross over the red and the upward momentum. You see where I actually got a green candle. Green candle came as it began to cross through that resistance line. And look where my P's are, right? Green candle with a flat bottom. You notice that my flat bottom candle came as it began to cross through. This one has, I mean, I really got to make this big in order for you to see that little bitty wick at the bottom. You probably didn't even see it at first, right? Let me make it big. You see, now you see that wick? You probably didn't even see it when it was small. So when I actually got that PSAR, look, so I got a PSAR flip and everything else right there. So this is where you actually got the green candle, PSAR flip, you got everything right here, okay? I got everything I need to take a trade right here. Now, let's look at your time frame confluence, okay? Let's check time frame confluence. I see it. Now, let me go up to the hour. I got my confluence on the hour. I got my confluence on the hour right here. I got it. You want to drop down to the 5, okay? My 5 is still buying, okay? My 5 is still buying. Look where it's at. It's all the way at the top though, but it's still buying. Now you didn't see all this sideways action yet because it hadn't happened yet, but my 5 is still buying. Now, why do we check our 4 hour? My 4 hour is that trend of the market. Because what was one of our first things? That I can take my trade to the next support, and I can take my 10 pips and cash out, or I can take it to my next support or resistance line, right? That was it. So I check my 4 hour for the actual trend of the market. What is happening right here? We don't have this candle yet. We don't have this one. We have this. Now, in looking at this, so let me move this over. Right here. Am I trying to take that past, I don't have that other candle on my 4 hour candle. So if I'm looking at that right there, do I honestly think that I can take this all the way up here, regardless of what that harmonic pattern tells me? And this kind of goes back to that other question about going back into the academy and understanding harmonics. Yes, I can go to the academy. You can you can do so many things. The tools are wonderful. The tools are great. Understanding harmonics and how they form in a market and understanding the percentages and all of that stuff, like the percentages are right here. Like, look, they're wonderful. You got your X, you got your A, your B, your C, your D. It's a Gartley pattern. It's great, right? And also understand this on the lower time frame. It's wonderful. And it's great to understand that. And the education is great. And I definitely say go back into the academy and understand that. You want to understand it. You definitely do. And so I definitely support going back into the academy and understanding that. But you also have to understand this, which is the BYOB Cashout and how it works, because it uses those 3 areas of value. It uses, this is that price action with a twist to it, okay? This is why we don't use 100 indicators, and you got to take some of that stuff off of your charts and everything else, because you can analysis paralysis, and everything you need is right here, right? This tells me right here I was not going to reach this take profit up here. Right here, it tells me that as far as I was going was to that take profit. Look at this, right? There was a take profit. There was a support and resistance line that happened up in here, like that next one. So that next support and resistance line was somewhere up in here. Not the one way up here. It was like one right up in here. That's that next support and resistance line, right up in here. That's as far as I was going. Because where are we going? To the next support and resistance line. So this tells me how far I can take my trade. Even if I pull a trade from the scanner, understand that I can go pull a trade from the scanner, but if I do not have confluence, if I don't have that time frame confluence, along with, I still got to check that trend and that swing of the market, because those lower time frames, these lower time frames, the higher where the market is going, which is the higher time frames, will override this harmonic pattern, because it's stronger. The market, where the market is going, which is my higher time frames, right? And then it's consolidated on my higher time frame. Where the market is going and what the market is doing on a higher time frame is what the market is doing. That is going to trump anything that happens on the lower time frame. So you might have a harmonic pattern that's forming on the lower time frame. Just like I can come through here on this lower time frame, I can come through here and I can find, I can find double tops, I can find trends, I can find all kind of stuff on here. I can find, like, I got support and resistance lines that happen. I can find patterns on the 5 minute. I can find a trend on here. I can find everything I need on the 5 minute too. But that doesn't determine anything as far as the market is concerned. It doesn't give me direction. Whatever happens on that hour and higher is what's going to determine what the market is doing. So I always have to consult with my higher time frames to understand what the market's doing. Give me a 555 in the chat if you're with me. All right, I'm glad. So this will help you. This will help you. Yes, you got to consult. Consult with the higher time frames. Plain and simple. Let's just consult with the higher time frame. Oh, I'm gonna pause for a testimony. You know I'm gonna pause for a testimony. 93% this week just for that reason. I love it. I love it. You know I'm gonna pause for a testimony. So you know I'm gonna pause for a testimony. I love testimonies. So I love testimonies. So don't laugh at me. I love testimonies. So now, so you all know you can send me a testimony. So now, so y'all just give Jordan a shout out, because at 93% just for that week. Consult with the higher time frames. Consult with the higher time frames. So even let's just look at another one, right? Let's just look at another one. Look, I love it. He said y'all turn. He didn't say your turn. He said y'all turn. He said y'all turn. Yes, I draw my support and resistance lines on a higher time frame, always. But you know, I don't, depending on what I'm doing, right? Depending on what I'm doing, will I, you know, because the higher time frames tell you what the market's doing. So depending on what I'm doing, will I, you know, consider the ones on the lower time frame? It all depends on what you're doing. So like when we're on that 9 o'clock call and we're trading indices, you know, that'll determine, you know, what I'm doing with those other ones, you know, with the lower ones. So, I mean, everything is there and it has its purpose, just like right now. You can use these lower time frames, right? We can use these lower time frames. Wait, what were we just? Yeah. So if you use them, you know, just know how to use them, right? Just know how to use them. Like we were actually using, right? For a while, I wouldn't pull up the 5-minute chart. Not until I was comfortable with you all knowing how to use it, because I didn't want you all using that 5-minute chart and completely ignoring everything else, right? So for a while, we wouldn't touch it. So just give me a moment. Hold on. So all right, so this one actually hasn't come in where this, so I picked one that hadn't played out yet. I might go to another one because I want you to kind of see one that's gonna kind of play out, because you see where we are on this one. This one actually hasn't played out. Now, for those of you all who are new, there is a playlist, Trading the BYOB Cash Out, because we only got a few minutes left on the call. Trading the BYOB Cash Out and Time Frame Confluence. And then, of course, on Tuesday, if you missed the announcement at the beginning of the call, on Tuesday, we will have like a basic training call. You know, we'll have like a basic training call. So we'll definitely have a basic training call. But that playlist will definitely help you. And if you're in, Mr. Rogers just dropped it. And then, of course, if you are in the Telegram group, that is also pinned to the top. So the playlist is actually pinned to the top. So now right here, you can see that this one has not played out yet. So let me see if this one, I want to show you one that's actually kind of played out some. Now you got to remember GBP, you got to love GBP, right? Because GBP will beat to its own drum. GBP will go 100 miles an hour in a different direction and then come back and do what it's supposed to do, right? GBP is a child you don't leave home by itself, right? That's what GBP is, okay? So you have to remember that about GBP. So just kind of keep that in mind if you're going to trade GBP. So, and that's why I wanted to show you a GBP. So of course, as always, let me check my line chart. I check my line chart. Now, do I make any adjustments to my take profit? You know, do I make any adjustments here? You know, I always make that adjustment. Always, always, always. Bring it back here. Now, as I'm looking, okay, I come here and I make this, I take this look right here. I got my blue line cross over the red and downward momentum, okay? I'm on this 15-minute chart. You know, blue line cross over the red and downward momentum. I have my red candle with a flat top, PSAR flip to the top. So let's take a look right here with this with an activator, right? And you kind of see this is also called on the 15-minute. So this would have been take profit 1, take profit 2, take profit 3, okay? Now let's check the hour. I check my hour, right? Haha, we love GBP, right? So you see where it's at. You can kind of see where it begins, but you see GBP, once again, it's not in alignment as of yet. Now, what do we know about GBP? GBP is my only exception to the rule. GBP is my only exception to the rule. What is that exception, right? What is that exception? That exception is I can check my 30-minute. Why is that? Because of the amount of liquidity in the market, right? Because of the amount of liquidity in the market. So right here, you see that I can check my 30-minute. And with checking my 30-minute, I can go to, when I do that though, I'm only going to my first take profit. I'm not going further than that for that. Now, I still need to check my 5-minute to make sure it's still selling, okay? So I know I at least got to take profit 1 off of that, okay? We know we got to take profit 1 off of that, okay? So we know we got to take profit 1. Now let's check. Now, once it did, we did see that it did begin selling on the hour. I still need to check my 4-hour, right? I still need to check my 4-hour if I'm gonna push past that point to make sure, because the hour is the swing of the market, the 4-hour is the trend of the market. The hour is the swing of the market, the 4-hour is the trend of the market. My trend of the market is not, I do not have a red candle, okay? There is no red candle here. Yes, my stochastic is beginning to line up, but there is no red candle here. What does that mean? I go no further than take profit 1. I go no further than my first support and resistance line, right? I go no further than that. Come back, what happened? That's it. That's as far as it went. And when it got there, it might have pushed through it a little bit, but guess what? It pulled back up. It pulled back up. It pulled back up. And you see where we're at? We're riding that line. This will help you understand. When you understand my hour and my 4-hour, my hour is the swing of the market, my 4-hour is the trend of the market. When you understand that, right, I got it. My harmonic pattern told me that I can go to take profit 3 way down here somewhere. I got it. And this is, you know, I got it. This is why we love the BYOB cash out. That's why we love it. And combined with time frame confluence, right? This is why we love it, combined with time frame confluence. Because what does that tell me? That tells me that I know when to get into a trade and I know how far to take it, right? Haha, I know I love BYOB cash out. I love your comment, thank you. So this tells me when to get in a trade and when to get out. It is no guesswork. It is no guesswork. It is no gambling. It is all analyzation, right? We analyze, we take profit, we put a 777 in the chat. You know exactly what to do, how to enter, how to exit. The green mean buy, the red means sell. BYOB cash out, time frame confluence, 777 in the chat. It is no guesswork. All you gotta do is follow the rules. No emotions. no emotions, follow the rules, and you got this. So, all right. That's it. It's just that simple.